Hello and welcome to Real Insights. Today we are talking with Achal Gandhi, CIO of Indirect Real Estate at Cbre Investment Management.
Hi, Achal. Welcome. Really appreciate you joining us here.
Thanks, Sam. No, happy to be here.
Yeah, so for the benefit of our audience, I'm just going to give a bit of background about you and also introduce the focus of this, this episode. So Achal Gandhi is the Chief Investment Officer of Cbre Investment Management's Indirect Real Estate Strategies. He manages the day-to-day operations of the global indirect real estate business, as well as the investment process, formulating top-down strategies, and overseeing client investment plans. The focus of this episode is on the investment process for an institution when making a commitment to a real estate opportunity. And in particular, how that process differs from an individual high net worth investor or a small family office. So to begin with, Achal, can you give us a high-level overview of your investment process and then maybe where the investment committee comes into that process?
Sure, and thanks for having me on, Sam. So what I'd say is that the investment committee and an investment process for us as an investment management business is critical, not only for us to make good investment decisions, but also is critical for our clients in trusting us with their capital. The way that our investment process works is that we have a three-stage investment process. So essentially, when a transaction is sourced by any of our investment teams, it is logged. There is an initial screening of that transaction. It's communicated to our portfolio management teams. And if there is in principle interest in learning more about the opportunity, our investment teams put together a preliminary investment memorandum, which goes to what we call our global investment team. So it is the senior members of our indirect team, and that opportunity is tabled to that committee for discussion. If there's interest at that committee to move forward, then our investment teams do a lot more work and they focus on the underlying markets, the real estate, the strength and track record of the operating partner, as well as the structure of the investment. And they bring it back to that global investment team committee. At that stage, appetite for that opportunity is then communicated and locked in. And if approved at that stage, it then goes to our formal investment committee. The investment committee can do one of three things. It can reject the transaction, it can approve the transaction without conditions, or it can approve a transaction with conditions. If a transaction is approved, either with or without conditions, we then move into formal due diligence stage, and that is where we incur costs in terms of onboarding external legal, tax advisors, and any other advisors that we require. And we then move to a final committee, which is called our post-IC committee, which is essentially representatives across our financial operations, legal, tax, sustainability teams, the investment team, our head of transaction management, and myself as CIO. And we go through all of the due diligence for a transaction, making sure that all the due diligence has been sufficiently carried out, but also that there are no red flags and no materially adverse findings compared to what we had presented to the IC. So it's only when an investment is approved at the GIT, the IC, and the post-IC that we execute that investment. So a robust investment process, but one that we are also quite nimble in terms of moving through. So typically from sourcing an investment to taking it through that process takes somewhere around 8 to 12 weeks.
Got it. Thanks, Achal. That's a good overview. So I imagine there's quite a lot of work that's been done between the transaction management team and the GIT prior to it getting to any of the investment committee stages that you mentioned. So, given that the deal or the proposition is fairly well established by the time it reaches the IC, what are the typical items that the IC will want to explore at that stage?
Yeah, sure. So, I mean, you're right. So, during our initial stages of our investment process, transactions are vetted thoroughly. So, by the time a transaction gets to the investment committee, it's been through several rounds of review already. That being said, the investment committee is comprised of extremely experienced investment professionals, and what they are looking at is number one, whether the real estate itself makes sense as an investment proposition. So, if we are investing into an in-place portfolio of assets or an asset that is of sufficient quality um, for our client base, and digging into the underwriting that we've assumed. So typically, our IC wants to make sure that we have realistic underwriting, as well as a number of scenarios that can look at both the downside as well as any upside scenarios as may be relevant. I'd say some of the key items that the IC focus on are governance. So in various structures and in various ownership percentages, you will have different governance available to us as an investor. We'll either be passive and have advisory board rights, or we'll have major control decisions depending on our ownership. And I think the IC really focus on the governance of a transaction and to make sure that that governance protects our investor base. And within that, looking at things like liquidity. So, do we have the ability to exit investments at our choosing, rather than being forced to exit at an inopportune time for our client base? So, liquidity is one of the key items, as well as compensation, fee structures, ability of our operating partner to execute the business plan, and finally, sustainability, which is becoming increasingly prevalent in terms of what we invest in, and the standards that we expect from our operating partners.
So I think you covered a number of the topics that the IC is looking at in terms of governance, more recently sustainability as well. Within those topics, are there particular red flags that come up in a deal or an opportunity that are kind of deal killers at that stage?
Yeah, I'd say every transaction is different, and ultimately it's a commercial decision as to whether you are being rewarded by the return of a transaction for any kind of imperfections in the governance or the structure. That being said, as I mentioned, I think liquidity is key. So having the ability to exit a transaction at a time of our choosing and not being locked in for a protracted period of time, or being in a position where you are dragged at exit at a point where you cannot control, which may be at a low point in the cycle. That is something that not only our IC, but us as an investment team would really think twice about before moving ahead with an investment. In addition to that, I think there are certain fee structures where the alignment is skewed in the favor of the operating partner. And again, if that skewness is too exaggerated, then I think it results in the operating partner acting on their own interests rather than for on behalf of clients. So again, that would be a red flag in terms of whether we would proceed with an investment or not. And then, as I said, very recently we've looked at transactions where it hasn't been a red flag per se, but it has been something that the IC have asked us to explore in more detail before executing the investment, and that is sustainability. So, is the operating partner and are the underlying assets future-proof, or is there a path to get them future-proof in terms of sustainability? And that means, looking at a number of items where we don't have all the answers today, but looking at whether assets are easily adaptable to EV charging, whether you can get assets to a net zero position by 2040 or 2050, and quantifying the cost for those. But that's one aspect of it. The other aspect of it is also having an operating partner that is willing to do all of that work. And what we've seen from investing globally is that um, managers and operating partners around the world are at different stages of their ESG and sustainability journey. And so, really, as a large investor ourselves, what we try and do is influence those managers to go in the direction of best practice.
Some helpful advice, and I think following on from that, I'll put you on the spot here. If you were a project sponsor that had typically raised money from, let's say, high net worth individuals, perhaps money from a small family office, and was now trying to raise money from an institution like Cbre, what are the things that you would be focusing on in terms of the presentation of the business plan, the presentation of the team and the strategy, given that you knew it was going to go through this really institutional process? Can you sort of put yourself in the shoes of a sponsor like that?
Yeah, sure. And I'd say that, we have in the past invested with operating partners who've gone through that journey of being operating partners for high net worths and family offices, and then have moved into a more institutional arena. I'd say from a team perspective, we would want to make sure that it's a stable team with succession planning that is able to execute the business plan over the life of that investment, but also that that team has a really strong track record. And track record is something that we really do dig into in detail. So making sure that that is in place, because if it's not, then it's a non-starter. What I would also say is that as you move into a more institutional sphere, and generally kind of bigger ticket investors, there is the requirement of more governance, especially if you are an operating partner that is making that transition and doesn't have, multiple funds that you can point to with that track record. Then I think investors such as ourselves want to have a large portion of control in terms of overall strategy, risk levels, debt levels, development, etc. And so being open to that is important, because that is a difference between potentially, high net worths and family offices that have small teams and delegate decision making to the operating partner, compared to institutional investors such as ourselves that have relatively, large teams and are able to react quickly and make informed decisions.
Moving to the actual investment committee itself. So if we look at, say, the Indirect Businesses Investment Committee, for those who aren't that familiar with an investment committee, can you tell us a little bit about the composition of your investment committee, how you sort of select those members, and if there's any process for change?
Yeah, sure. So maybe just answering that last question first. I think the composition of an investment committee should evolve and change over time to make sure you are mirroring best practice in the industry. So I think just to have a static investment committee with no change probably doesn't result in best practice. So we have evolved our investment committee over the last 12 years. Today, it comprises of three sets of members. So the first set of members are senior members of my own team, so including myself, the head of each of our transaction teams, and other senior members from my own team. So we all sit on the investment committee. The second layer of members are senior executives from across the wider platform, such as our global CIO, our president of real estate, our head of insights and intelligence, and our head of sustainability. So they are what we call global executive members. And then the final set of members for our investment committee are three independent members. So they are completely independent of our business, and they are there to opine on every transaction. So we have three independent members who are based across the globe and can provide that kind of global knowledge as well. In terms of best practice, I do think it definitely makes sense having independent members on an investment committee, because it gives what I think is a challenge to the internal teams, but it also provides comfort for our clients that there are independent members there who can, again, question robustly any investments that are coming through the investment committee. So that is something which I do think is best practice, and we are seeing across the industry.
You talked about the composition and how you've got various members and the independent members as well, which I think, yeah, makes sense and makes for a good, robust composition of the investment committee. I also imagine that within that group, there would be some really experienced investors with some strong opinions as well. And maybe from time to time, people disagree on the merits of an investment. But just as more of a sort of a soft question, what do you think in terms of a personality-wise? What kind of personality do you think fits well on an investment committee, working well with others?
Yeah, it's a good question. Well, firstly, I think an investment committee is there to challenge, and by nature, if you are sitting on an investment committee, you should have a wealth of experience and knowledge to bring to the table. So I'd rather have an investment committee that is vocal and challenging rather than one that is just rubber stamping decisions. That being said, it's also important for an investment committee to be collaborative and also to be cohesive rather than disruptive. So getting the right personalities, setting the right structure for the investment committee is really important, and also having a very strong terms of reference in terms of what the investment committee is there to do and what it's there and not to do. So what we don't want is an investment committee re-underwriting a transaction. We want them opining on the proposal itself. So I think setting all of that out really helps to avoid any conflicts down the road. But I wouldn't say that the investment committee challenging the team in terms of investment proposals is a conflict. That is what they're there to do.
That's great, Achal. Thank you so much for your time. Really appreciate you joining, like I said, our first episode of Real Insight. Yeah, thanks again, and wish you all the best.
Thank you.